Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Thursday, April the 19th, 2012. Well, a change of trend today and a candle that has a lower high and a lower low. A black body candle and a fairly large candle. The black body denotes the sellers making strong net bearish progress on the day between the open and the close, and they've increased the amount of progress that the sellers made on the previous day's trading. The sellers, however, failed to take strong control of this market. They have control, but it's only fairly weak control by closing just below the midpoint level of this candle. And we see a shadow on the top and the bottom of this candle, and this is very similar to a spinning top type candle. Not quite a perfect spinning top, but the issues here are the large shadow on the top of the body of the candle and on the bottom of the candle. And that represents downside price rejection and upside price rejection. So an indecisive candle where both sides are really having a bit of a battle when they move to the extremes of the range for the day. Now at the high, the market found resistance at the Kijun-sen, and we see the shadow, and there was downside price rejection from the Kijun-sen. And down towards the low, we saw the market find support at the 1370 level that I highlighted previously, that could hold as strong support for this market. There is also very strong support at that level for tomorrow's trading, and it coincides with the top of the cloud. And the top of the cloud will strengthen the support that's offered around that region. We have potential for very strong support all the way down through the cloud, down to around 1325 roughly, so very strong support down below. To the upside, above the Kijun-sen, which is trading at 1389, we do have potential for strong support up to strong resistance, up to 1400, the round number, and that is a fairly significant resistance for this market. Now in terms of Ichimoku, the market is trading above the cloud, so we have an overall positive bias in big picture terms. The market is, however, trading below the Kijun-sen, so the market remains bearish in the medium-term time frame, and trading just below the Tenkan-sen, which means that the market is just bearish in the short-term time frame. Looking at the Chiga span, that's below the close of the corresponding price action here, and that's signifying bearishness for the market, but failing to confirm some of the signals that we're seeing in the big picture terms in this market at the moment. For the next day's trading, obviously with the trend being down, we do have strong support down around this level, roughly about 1370 and just below, that I've mentioned previously, so it wouldn't surprise to see the market bounce off that level. 1378 will be an important level for the market when it starts trading tomorrow. If we see bullishness testing above there, then the next level of resistance will be 1389 at the Kijun-sen. And if we see the market approach that with some good upside momentum, we could easily see the market test up to 1400. But we do have a black body candle. The trend is down, but solid support down below and solid resistance up above. Next, moving to gold, and here we have a continuation of the trend to the downside. A spinning top type candle. Two trading periods ago we had a candle that made a lower high and a lower low. The previous day's trading we had a candle that was inside the body of the previous candle, the range of the previous candle. Today we've had a candle that's continued with a lower high and a lower low, but a spinning top type candle. So a candle of indecision for today's trading. A very small body candle, so it tells us that neither side has made any serious bullish nor bearish net progress between the open and the close, and that by itself raises doubt about continuation of the trend to the downside. But we also have the large shadow on the top of the candle and the large shadow on the bottom of the candle, and that represents downside price rejection from the resistance offered at the Kijun-sen and Tenkan-sen, which are trading around 1656, but also upside price rejection from the zone between 1625 and 1643. So a lot of indecision in this market. This market is also set up for a potential change of trend, not only because of the indecisiveness in the market, but we also have a potential Japanese candlestick reversal pattern, a bullish reversal pattern. It's a Harami pattern, and we have a downtrend in place, a black bodied candle, and a small bodied candle that's within the body of the previous candle. So potential for a change of trend to the upside. In terms of our Ichimoku indicators, we have the market trading below the cloud, so the market is bearish in the long-term time frame, and also trading below the Kijun-sen and the Tenkan-sen, so the market is bearish in the medium and short-term time frames. Looking across at the Chikou span, that's trading below the corresponding closing price, so that's confirming the bearishness that we're seeing in the market at the moment. Having said that, however, with the market being bearish in all three timeframes and the trend in the first time frame being down as well, we don't have the sellers supporting the trend to the downside because of this indecisive candle. So there is much doubt as to whether the market will test to lower levels. We also have this strong zone of support that the market is traded down to and has been rejected from. So that will limit the downside that we'll see over the next few days. By the same token, to the upside, we do have strong resistance at the Kijun-sen and Tenkan-sen, and then above there to this level around 1667. We don't have any strong resistance from the cloud until the market trades up to around 1693. So probably the resistance is not as strong as the support down below, but certainly the Kijun-sen and the Tenkan-sen trading in the same area will be a potentially fairly strong barrier for this market. So moving forward, we have a market that's bound between strong support and resistance, an indecisive type candle where we really do need to watch how the market reacts around the high and the low of the current candle. If we see a bullish breakout up above the Kijun-sen and Tenkan-sen, we could easily see the market trading to 1667. But down below here, we do have very strong support that extends all the way down to roughly 1613. Next to light sweet crude oil, and once again with this market we have an indecisive type candle, but a candle that has changed the trend to the downside. We have a candle that's made a lower high and a lower low, and has tested down below the bottom of the cloud once again. Previous 3-4 days trading, we had the market testing below the cloud, and we've seen buying coming back in, so that's a very important level for this market. The bottom of the cloud is trading at roughly 103, so a very, very important level. With this trend continuing down, the market also found support below the Tenkan-sen, and that's significant as well. So very, very strong support around that level, roughly around 103. The market being rejected from there, however, did close within the cloud. So by closing within the cloud, the market remains neutral in the longer term time frame, bearish in the short term time frame by remaining below the Kijun-sen, the pink line, but also remaining bullish in the short term time frame by trading just above the Tenkan-sen. So we're getting some mixed signals in this market. The Chikou span here is below the corresponding price action, so that's not confirming any of the major signals that we're seeing. It is confirming bearishness with the Kijun-sen, but we'd like to see that confirming all of the other indicators. If we do see a breakout down below the cloud and a close below the cloud, then that would be a signal in Ichimoku charts terms, and I'd prefer to see a bearish breakout. If we do see that, that will give us more confidence of the signal. But one thing that we must be aware of is that we're trading near a flat part of the cloud, and very often when we have breakouts above or below a flat part of the cloud, they can be false breakouts, and that's what we've been seeing through here. So we're not getting follow through. With a solid bearish breakout, however, we could have some stronger confidence, but I think because we have this long area of flat cloud, it's probably preferential to wait for another day's trading to see that trend continue to the downside if we do see that breakout. We do have very strong support that's been set up recently around 102, where we can see price rejection with these two candles, and then certainly at the 101 level there was previous very strong price rejection to the upside. So very, very strong support down below that extends to 103, 102, and then 102, 101, and then down to the round number 100. If this market does change trend and start trending to the upside, we do have very strong resistance overhead. The 103.39 level is very important for this market. We saw the market rejected from that level today, so that will be an important level if the market is to continue trading up. We do have strong resistance offered at the Kijun Sen, which is trading at 104.69, and importantly that Kijun Sen is pointing flat, and there is a possibility that the market will be attracted back up towards the flat Kijun Sen. If we see enough momentum from the buyers to trade up through the Kijun Sen, then we do have the top of the cloud offering as resistance around the 105 level, and then an important level at around 105.31. So very, very strong resistance overhead. Looking at the current candle, we have a fairly large shadow on the bottom of the candle and much larger than the shadow on the top, so the amount of the loss of commitment by the sellers was certainly greater than the loss of commitment by the buyers, and we have seen the buyers take control of this market, only very weak control by closing just up above the midpoint level. So it does set the market up for a potential change of trend to the upside, but we do need to remember that even though we do have this strong support down below where the market's trading at the moment, we do have very, very strong resistance overhead. So not a market that's really tradable for a while until we break out above the strong boundaries above and below this market.